Fidelity's core money market fund positions. Which ones do we hold and why? How do you change your core money market fund position step by step? And what other money market fund options might you want to consider? Hello, Super Saver. I hope you're having a good week. So, this is what we'll be talking about in today's video because many of you had follow-up questions about Fidelity's core money market fund positions after we posted this first money market funds versus cash video a few months back. I've linked this original video in the description below for those of you who want more details on the nitty-gritty of money market funds, because according to the ICI, the Investment Company Institute, a leading association representing regulated investment funds, total money market fund assets are on track to cross the $5.5 trillion mark any month now. Here's where they stand at the time of this taping, a bit down from last week. No wonder we keep getting more and more questions about money market funds at the leading brokerage firms. Today's video is Fidelity focused. If you're a member or super saver interested in something similar for Schwab or Vanguard, please do drop a comment below and let me know. Here's our front of video disclaimer as customary before we dive in. For a detailed disclaimer, please refer to the end of this video. The good news about Fidelity's core money market fund positions is that it's automatically established when you open an account with them. And once it's set, you don't really need to think about it all too much. Any cash that goes into your Fidelity account, for example, additional deposits, initial investments, trade proceeds, and cash dividends gets basically parked into the core money market fund position, earning dividends, like interest basically, until you decide to use that money for security purchases, Fidelity and non-Fidelity mutual fund purchases, check card purchases, ATM withdrawals, check withdrawals, and bill payments. So the core money market fund position at Fidelity is quite attractive in the sense that it allows you to earn some interest while also keeping immediate access to the cash almost like it was in a checking account. If you don't know what your core money market fund position is, don't worry. We'll walk you through step by step how to figure this out and how to change it in the next section if you wish. That was the good news. The bad news is that Fidelity's core money market fund positions don't typically offer the highest yield when compared to those of other leading brokers like Schwab, which are yielding closer to 5%, and in the case of Vanguard, even above 5%. But they are still pretty good, as you can see here, especially when you consider that a portion of what you earn from these two core money market fund positions is generally exempt from state and local income taxes, because both SPAXX and FZFXX hold U.S. Treasuries as a large part of their portfolio, and interest earned on U.S. Treasuries is generally exempt from state and local income taxes. Keep in mind that the 7-day yield is always a net yield, meaning the expense ratio is already deducted. You don't need to deduct it again. Also note that while any money that's parked in these core money market fund positions earns dividends daily, those dividends are only paid out to us monthly. So, what makes things a bit confusing when it comes to Fidelity's core money market fund positions is that they can vary depending on the type of account you have. So, if you have a normal taxable brokerage account, these are typically the core money market fund positions available to you. SPAXX is Fidelity's government money market mutual fund, and FZFXX is Fidelity's treasury money market fund. And if you have a tax-advantaged individual retirement account, such as a traditional IRA or a Roth IRA, it's usually these two here. Again, SPAXX is Fidelity's government money market mutual fund, and FDRXX is Fidelity's government cash reserves money market mutual fund. And if you have a tax-advantaged health savings account, it's generally only this one here. More on the differences between them shortly. And for those of you wondering why different account types have different core money market fund positions, your best bet is to call Fidelity, as I'm not quite so sure either what their rationale is for this. But at the current time, the difference in yield in interest earned isn't so much anyway. Right, so in addition to these core money market fund positions by account type, There's also an interest-bearing cash option, FCASH, if you have a normal taxable brokerage account, and the FDIC-Insured Deposit Sweep Program, if you have a tax-advantaged retirement or health savings account. Now, I don't use either of these options because, as you can see, FCASH pays a much lower rate than the core money market mutual fund positions, more than 2% less currently, in fact. Likewise, the return on the FDIC-Insured Deposit Sweep Program is similar to that on FCASH. In case you are interested in Fidelity's FDIC-Insured Deposit Sweep Program, though, these are the 25 banks that take part in it. Apart from the FDIC-Insured Deposit Sweep Program, all the core money market fund positions and FCASH fall under the purview of the SIPC, the Securities Investor Protection Corporation, which protects stocks, bonds, and other securities in case a brokerage firm goes bankrupt and assets are missing. The standard SIPC coverage amount is up to $500,000 per customer, including up to $250,000 for cash held in a brokerage account. It is important to remember, though, that SIPC does not protect against investment losses due to market fluctuations. So from an SIPC perspective, these core money market funds are considered securities, and FCASH is considered cash held in a brokerage account. Check out this video here for more details on SIPC. I've also linked it in the video description below. So the yields on all three of these core money market fund positions are pretty similar at the moment, hovering between about 4.7% and 4.8%. Here are the three main differences between SPAXX, FZFXX, and FDRXX. Difference 1. SPAXX and FDRXX hold agency securities, while FZFXX does not. Here's the portfolio composition of SPAXX, FDRXX, and FZFXX. And here are the agency securities in SPAXX and FDRXX. Looks pretty similar, right? And by the way, all three of these funds are managed by these same two fund managers. Difference 2. For SPAXX and FDRXX, the weighted average of all the maturities of the securities, known as the WAM, is about 24 to 25 days currently. It's about half that for FZFXX at 12 days. Generally speaking, the longer the maturity, the higher the interest, but also the greater the sensitivity to interest rate and market changes. But given the short WAMs that we're talking about in these instances, I don't think this matters too much. And difference 3, SPAXX and FDRXX are also much bigger in terms of net assets than FZFXX. SPAXX has net assets of about $271 billion, FDRXX of about $217 billion, and FZFXX of about only $41 billion. So, given that at the present time the difference in yields is pretty much insignificant across the core money market positions at Fidelity, at least in my mind, we usually just stick with SPAXX for the simple reason that SPAXX appears to be the core money market position that is more readily available across the different account types that we hold with Fidelity. In our HSA, though, FDRXX is the only choice we have. If SPAXX was an option, I'd probably have selected that as well for our HSA, just to simplify our financial journey. But it's a moot point in this instance. The most important thing for us, quite frankly, is to make sure that our core position is not in FCASH or the FDIC-Insured Deposit Sweep Program, given how much lower those yields are. Now that you're well versed on the different core money market fund positions available to you at Fidelity, let's move on to the next section of this video. So let's pretend that I don't like SPAXX anymore as the core money market fund position in my taxable brokerage account. Here's what I would do to change it. From my normal taxable brokerage account, I'll click on Positions. A screen will pop up showing me what I'm invested in. Now, let's scroll down and click on SPAXX, my current core money market position. And this is what appears underneath. To learn more about SPAXX, I can click on Research here. But for the purposes of this tutorial, I'll just click on Change Core Position. And this box will pop up. So for this taxable brokerage account, I can choose between SPAXX, FZFXX, and FCASH, as discussed earlier. And as you can see here, with FZFXX, like with SPAXX, your cash is invested in a mutual fund and earns daily dividends, which are paid monthly. With FCASH, your cash is held at Fidelity as a free credit balance and earns daily interest, which is also paid to you monthly. I'll select FZFXX to show you how this works. And because I don't like that FCASH yields more than 2% less, then I'll hit Review Order. And this is the screen that appears next. I'll read through everything and make sure I'm okay with the change. If I'm not, I can click on Edit to go back and make the necessary changes. I'm good to go, so I'll click Submit. And here's my confirmation message that my core position request to change from SPAXX to FZFXX has been submitted and will be processed in about 1 business day. All done. So, for those of you with taxable brokerage accounts with Fidelity who are also in a medium to high tax bracket, you may also want to consider other options such as Fidelity's municipal money market mutual funds. If you choose a municipal money market mutual fund, though, it would not be considered a core money market mutual fund position, meaning that you can't access that cash immediately if you wanted or needed it to buy another security, to write a check, or to pay a bill. In this case, you would need to manage your municipal money market mutual fund position like any other fund, where you need to buy or sell the fund yourself to manage the cash position. No full automation here, and this seems just not to be worth the additional effort compared to the core money market mutual fund positions offered, at least not for us. But as I always say, everyone's financial journey is different. That said, if we scroll down, we can see that Fidelity offers a number of different municipal money market funds, depending on whether you're looking for a national one or a state-specific one. And some of them can even be further broken down based on how much you're planning on investing. Generally speaking, the higher the investment amount, the higher the yield in these instances. If money market municipal funds are something you're interested in learning more about, please do drop a comment below and we'll see what we can pull together. All right, Super Saver, I hope you enjoyed this video and learned something new. For the more conservative folks in our community, check out this latest video on the top CD rates we found for this month. For those of you who are slightly more adventurous with your fixed income portfolio and looking for a bit more return with a bit more risk, check out our latest member videos and get your questions ready for our next live member Q&A on August 25th at 5:30 p.m. EDT. Visit our channel page or the join link in the video description below for more details about Diamond NestEgg membership. And thanks to those of you who pointed out that I should use EDT right now instead of EST. Is there such a thing as PDT and PST as well? In any case, as always, if you did enjoy this video and learn something new, don't forget to share with those you care about and hit that thumbs up, and see you again very soon with more brand new wealth building content for your financial journey.